All right, how's it going, everyone? Welcome to another episode of Forward Thinking Investors. We talk to investors about all things portfolio construction, investing, and just jamming on investing. Today, we have David Paul here on the podcast, who's the founder and solo GP at DWP Capital. David, welcome to the show. How's it going?
Hey, Matt. Thanks, man. Thanks for coming. Let me come on.
Yeah, 100%. Excited to have you on. It's cool. As we were talking about before we started recording, I think you're the first local investor that I've had on the investor podcast after like 25 investors. So I'm excited to show everyone a little bit of that desert DNA here.
Yeah, I don't know if I'm a good representation, but I'll do my best.
Well, I think that's good, right? I mean, we both have lots of opinions on all things Arizona. But like I think like in my opinion, the people I love to interview on the podcast are the ones that just like do their own thing and they kind of carve their own path, and that's what leads to the most interesting conversation. So we'll kind of get into it. But I think to start, tell us just high level, DWP Capital, super high level. What do you like investing in? Just like give us an overview of the firm, what you like investing in, then we'll kind of like go a little deeper into how you got into all of this.
Yeah, so we like to lead rounds in companies that are generally B2B vertical SaaS or tech-enabled service companies. So, companies that are really sharp and keen on focusing on a certain market segment or a certain vertical and solving a very niche problem. That would, conclude that, some of these markets might be smaller than a traditional venture capital type market, but we feel that the riches are in the niches, and we try to build, bigger companies in small markets and be able to kind of gain, really good market share and create EV that way.
Straight up. So like, it sounds like obviously you have a very specific thesis here. So I kind of want to go back now that we know where you're at. How'd you get into investing? Do you mind sharing like your path of how you landed on DWP Capital? Is this your, I obviously know, but just so for people that don't know, like, is this your, your first time investing, or how'd you kind of like get yourself into a situation when you were being a GP at this fund?
Yeah, no, absolutely. So DWP Capital is my initials because I'm super creative like that. But I got into investing. I've been doing this early stage stuff for about 7 or 8 years now. I got into it via nepotism. I have an older brother that's a venture capital private equity guy. I was a CEO of a healthcare services company in Florida that I sold. I was probably the worst operator on the planet, but, I was able to build something and sell it. And, so I've got, a little bit of operational experience, nothing compared to like a real tech founder, but, probably done everything wrong in the book. And then when I figured out what I wanted to do after that, I asked my brother Andy where I should go, and he recommended that I go work for a fund here in Phoenix called Tallwave Capital, where I jumped in and started as kind of an unpaid intern. So I went from CEO to unpaid intern, worked there for about 1.5 years. And then I got pulled into running the portfolio and new deals for kind of a multifamily office here in Phoenix called Canal Partners, in which I worked there for, about 4 or 5 years.
Cool. So you have this investing experience, then you decided to go ahead and start DWP Capital. At what point did you decide that you wanted to do your own firm? And is it different from being in someone else's firm? I guess what are the similarities and differences between investing in someone else's capital, in another person's firm versus starting your own firm, raising your own capital? Are there a lot of differences, or is it still kind of similar?
Yeah, no, I there were a lot of like unforeseen differences. I thought that, the deal flow and the investors would all of a sudden all follow me, right? That didn't necessarily happen. I got a portion of that, but not nearly as much as I forecasted that was going to happen. In addition, going out and doing the work and actually making the investment decision was a lot harder to do on my own, because at the end of the day, I was the junior partner, vice president, whatever at the firm. At the end of the day, I had 2 managing directors that had really the lightning rod and the ultimate say in the decision. So, making the actual investment decision in my own firm is a totally different dynamic, because I actually have to sell it and have a lot of conviction onto it.
And now that you have your own firm, how do you decide to invest in one company versus another? Like, obviously you have your thesis, but I'm sure you see lots of deals, and your kind of job is to say no to most of them, right? You can't invest into everyone. So are there attributes of startups or attributes of founders that you look for when you're deciding to actually deploy capital versus them maybe not being ready for your capital yet?
Yeah. So I like them to be far enough along to have like relatively good signal on product market fit. And I kind of have like a no KO policy, right? Like I want a business that really doesn't have like a one-shot knockout capability, right? And that can can weather like harder times, management missteps that happen, because that's naturally happens when you have an early stage company. And you do that and you mitigate those risks with companies that have relatively moderate cash burn, companies that have good contract values that are providing demonstrable ROI that, you can count on that recurring revenue. And honestly, like the ultimate heuristic for me is like, if I feel like the bones coming out of my body that I want to do this deal, that's a really good indicator too, because I lead with probably one of the biggest checks. So, I don't do a deal just to do a deal, because I usually have upwards of like $250,000 in these things myself. So, it's one of those kind of things too. Like, do I really think that this is a really good opportunity?
Totally. And I'm curious, does your decision on is something's a good opportunity change at all with the changing of the macro economic climate? Obviously, things have changed a lot in the last year and a half to 2 years. For you, does your day-to-day change based on the markets being kind of going, down and to the right versus up and to the right? Or are you pretty consistently doing the same thing every day? How does that impact you as a GP?
It impacts me more in the fact that like, I need to be a little bit more cognizant of like who is going to be interested in this company downstream. Whereas if you were any SaaS business, I think that you would get funded in the last 2 years. Whereas now I think people are really looking at who's going to be buying this stuff, what's going to be an acquisition, what's going to have a really good multiple versus, kind of an acqui-hire. So I feel like people, I'm more or less like the other, I would think, oh, I could just always sell this business to private equity. Well, I don't necessarily think that might necessarily be the case, depending on how deep the value is of these softwares.
Absolutely. And then, as I alluded to, which you may or may not be excited about, but like, we're both in Arizona, right? I've grown to love Arizona over time, although it's taken me a little bit. I think there's a lot of opportunity here for you. What do you like or dislike about operating in Arizona? Do you think it gives you an edge at all being outside of a major tech hub like San Francisco or Miami? Or just tell us a little bit about operating out of Phoenix, which is like a non-tier 1 tech hub.
Yeah, I mean, I don't know the difference, to be quite honest, because I've only operated out of this. I've collaborated with firms on the coasts. Part of me is very envious of them, right? Because the people seem smarter, the capital seems more bountiful. However, there is something to like, lifestyle that I think is really great here to live. But yeah, I mean, I wouldn't know what it's like to work 12-hour days, 6 days a week, because I've never really had to do that. But like, other people in other cities.
Totally. Yeah, I think the thing I like about Arizona is, at least for me on the founder side of the table, is that I can observe what's going on in those other cities and like, look at actions and do the same types of things here in Arizona, but I don't actually have the issue of the brain drain. Like, I feel like it's very much a groupthink in those big tech hubs where, you do what all the leaders say to do. But in Arizona, like, it's kind of a free for all. So you can kind of learn to think for yourself, which
I think that's right. Yeah, I think that's right. There's less consensus to jump on.
Yeah. Which I would say, correct me if I'm wrong, but I would say that's a better combination for a founder, but probably harder for an investor, right? Would you say that's true? Or do you like that it's not as consensus driven, so you can do your own thing as an investor?
I like that it's not consensus driven, because I think it would be harder to find opportunities that are reasonable. I mean, think if everybody like had this bandwagon, kind of mentality. It would be like a major city, in which case, I mean, it's very much kind of like, how much capital can we pump into these things, and like, can they grow into their valuation? And, that's just a model I've never ever gotten comfortable with. So, I feel like, I kind of like a little bit of scarcity on the capital side, because it forces founders to actually like, really deliver value.
Totally. What have you learned in the last, you said 7 or 8 years being in investing? What have you learned that you didn't know in year 1 that you now know in year 8 or 9?
Yeah, don't ever count on relationship deals working, Right. And so I always tell people that to begin with, and anyone who's in the investing group, is that everyone's pushing their book on each other. Right. And, everyone thinks, oh, this person was smart, they've had an exit, blah, 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 blah. The bottom line is you do not know the motivation of somebody who's pushing their book onto you. So you have to do your own work 100%.
Can you define, you kind of alluded to it, but I just want to make sure I understand. What is a relationship deal? And what other types of deals are there? Just, I haven't heard that word before.
Yeah. So a relationship deal is a deal that you're putting money into because you feel like you're going to get more value out of the relationship with the person that you're doing the deal with than the actual outcome of the deal itself.
Got it. Versus like just a traditional, here's money now get a huge exit so we can get a multiple. That's more of like a business deal, a standard.
Yeah, right. Exactly. Like let's say for instance, like I'm co-invested with a VC and then in a deal and everything's going great. And then that same VC shows me a deal within their own portfolio if it's an extension round. And I'm like, okay, this is a chance for me to, extend my network, do a deal with these guys who, appear very smart. They were in different deals that did really well. And then at the end of the day, though, that's not a real good reason to underrate a deal, is because you're hoping that there's going to be a lot more relationship capital being optimized than actually ever has occurred to me. Right. Like I've never really every deal that I've done like that just has been pretty disappointing.
And without giving away any of your secrets, obviously as a venture capitalist, you do need to meet other investors and build relationships. So I'm curious, what are the best ways that you expand your own network in regards to LPs, in regards to co-investors, in regards to just getting people to share deals with, so you can get, an idea of if your calibration is right? How do you expand your network as an investor?
Yeah. So generally I lead, so getting co-investors isn't terribly difficult because usually they underwrite my diligence. But to kind of get that goodwill going, right? Because I'm a small fish, in a great big scheme of a lot smarter and more accomplished people in the investor world. I do things kind of in a rhythmic approach. I sent out quarterly newsletters with my findings and the deals that were good, but I passed on because they weren't super myopic in my thing. So, I've got a really regular cadence on how I kind of communicate with people. What I found this last quarter, though, actually, is that DWP Capital is going to be mostly an outbound shop and going into the next year. We are going to be banging phones and not doing a lot of the syndicate, talking to other investors to see if I can get allocation. For the from the previous reason is why are they showing me this? They're showing it to everybody else, right? They're optimizing for valuation. So what is the real incentive here? And there's kind of a misalignment of incentive.
This is why, for my own company, I decided Seed Scout wasn't going to be in the venture game. We're going to be strictly in the SaaS, software, no equity game. Because everyone, like you said, everyone has, well, I don't know if you said this, but you alluded to just everyone has an incentive, and you don't exactly know, what that incentive is when they share the deal with you. So I love that. Is there?
Well, yeah. I want to sell a company. All my deals are deal by deal. So if I get into a company at a $10 million valuation and I sell it for a $50 million valuation, and I return 5x to an investor in 4 to 5 years, I'm a fucking hero, right? Whereas that would not be successful in a traditional venture type outcome, right? So I don't really match well, so with the general community.
Well, I think that, I might have a lot of thoughts on this. I think that speaking of consensus views, I think the portfolio construction and what's counted as success in VC is I think a little skewed just based on what someone said 20 years ago in a book about, the power law. Obviously the power law totally exists in venture capital, but I think it's a little more nuanced than that. I guess that's another thing that I'll ask you is, an additional question. Is there anything else that you've learned over the last 5, 6, 7 years outside of don't do relationship deals that you'd want to share that your former self didn't know?
Yeah, markups don't really mean anything. It's really how much dollars you've returned. So, looking at
why, and for people listening, I know what a markup is, but some people listening may not. Well, what is a markup?
Absolutely. Yeah. So, if I'm looking at a deal and I'm in the, in the illiquid private markets and another investor comes in on top of mine and increases the valuation, I can mark up my book, right? Meaning that my performance hypothetically has gone up. The issue is that these investments are illiquid, right? And in the venture capital game, we are pushing the valuations forward because we're betting on growth. So generally speaking, these valuations are much more than what these actually things could sell for at that given point in time. So when you see, funds that are going out and raising and they're showing a TVPI, which is total value paid in, of like 5 to 7x, I feel like that's a pretty inflated number, right? Based on kind of market dynamics. And now the market's completely changed, right? I don't, like it's Q3 of 2022. And, I doubt that those investors are marking down their books. They marked them up. I don't think they're marking them down. But I think at the end of the day, it's really how much capital have you put back into people's pockets that matter.
I love that. And then I think for one of my last questions is, if there's a founder out there that, is in your thesis, that might want to work with you, what's the best way for someone to learn more about DWP Capital and find you if they think they're a good fit for your fund?
Yeah, no, absolutely. So we have a website, dwpcapital.com. I'm on LinkedIn. I'm pretty active there. So just reach out to me. If you'd mention the podcast, that would be great. Just so I can, I sift through it and I can be able to identify that, and I'll set up a call. Love to talk to you about what you're doing.
All right, David, thanks so much for coming on to the podcast. Lots of insight in a little amount of time. I appreciate you coming on, and best of luck finding the next unicorn.
Thanks, man. Appreciate it.
Bye.